Alrighty, daddy, my corny gangsters. Today is a recap on ES and NQ and how I messed up today's trade because I was trying to press the trade too much on NQ because I like NQ more. I feel like it's more volatile than ES, that its moves are a lot more. So I was basically trying to look for a move that wasn't revealing itself and completely ignoring ES when the two heavily correlated markets were performing a perfect SMT divergence, showing that ES had more bullish sentiment in the first place regardless. So I should be more focused there just from the SMT divergence on it outweighing NQ at the time in general. But just completely obliterate to the fact there was a 5-minute market breaker structure on ES, and I was looking at NQ, who like la da 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 the whole time. Could have got a 2.3, like a 2.2 or 2.5 to 1 or 3 to 1. There was two institutional levels that aligned with two FIB projections that could have been made. So today's lesson, just focus. You know what I'm saying? ES and NQ got more than enough. Trust me. You gotta be paying attention. Don't be Mr. Looking everywhere, trying to catch a move here, catch a move there, when you can't catch a move doing jack shit, buddy. Calm your ass down and lock in on ES and NQ if you're trying to do that lower time frame shit. Alright, so we see this right here. Boom. We opened up. What did we do? Scoop the low, take off? Not necessarily, but we did scoop the opening price. Now, if we go down to the 4-hour, we actually gapped up. Asia made a range, a bullish range, and then it came back, and then London swept Asia lows right here. So since we got London sweeping Asia lows, and we're closed bullish on the 4-hour already, we came in closing bullish, then we swept. We're just continuing bullish after sweeping that. So bullish sentiment, a bullish bias on the 4-hour, and London swept Asia. I bet, and that London sweeping Asia is of course the daily gap. Oh wow, the opening price. So let's bring it back a little bit. All right, same thing over here. Boom, it came up, set an Asia range. London swept the lows of Asia. Boom. All right, so we're bullish. We go into the hourly. Today's trade was actually super simple, super easy, and I actually waited for it just to not do shit. So I'm like, all right, if we're bullish, we're pretty high up in the range right now. So I was looking kind of for some shorts maybe down and here. No. Or was I waiting for it to come back to OTE? Because look at this. This is a perfect range. OTE comes back, sweeps these lows. Thing is, over here on a, what's it called? ES was actually performing the algorithm way better. I should have been paying attention to ES. Really, I don't get how I'm going to pay attention to ES, NASDAQ, and gold. That don't make any sense. And I'm just always kind of losing money in gold. I'm catching some good days here and there. But it makes more sense to just be ES, NQ focused, and A. You see something on gold, cool. But A, really don't even be open-minded to the shit. Just focus on ES and NQ because that's the shit that everybody is trading. That obviously makes sense, yo. So, we got this bullish order block right here. Now this is just the 12 o'clock line right here, the midnight line. But that midnight line is also perfectly aligned with this hour order block right here. So let's just look at that dip below midnight price as a sweep of liquidity from this 1-hour order block. Now on NQ, there was an lower. There was two lower order blocks. This one got hit right here. This one is bullish. Alright, so here's the big part was they both came down to OTE. This is on 30-minute, or this is on the hour. Yeah, that's the hour order block. You saw the hour order block. Now you see right here, we swept this low in OTE. Alright, and then what happened right after that? Sweeping this low in OTE, and we didn't come down here and sweep the Asia London lows. New York came over here and swept the London lows, which is showing SMT divergence, which means there's a divergence in between the indexes, and it's a bullish divergence, a bullish SMT divergence. This is already performing a pullback to equilibrium. Alright, so I'm over here like, where's our 5-minute breaker structure, then pullback? Because when we got this breaker structure right here, noting this as a swing high because it's an up close candle and a down close candle, not this candle right here. Because this is just a down close candle from a down close candle right next to a down close candle. So I was over here lost, ignoring the complete fact that this already broke structure to the upside. This already had an SMT divergence with this low right here. This low right here, or yeah, they had a divergence. So this closed bullish, breaking structure, while this closed bearish, just continuing to sweep some more liquidity from, I guess, what appears to be the 80 levels. So it came down here, dipped its toe more into the 80s. Really should have realized this breaking structure was clean as can be. Really, it really was. And then it has, a range to offer. So we pull from here to here. There's a range, and then we could pull the JW. So this is my Swift. This is a Fibonacci tool of my own design. It's kind of my greatest piece of work. I'll show you all the levels. I'm just kidding, but this is a Swift. This is a mix of different Fibonacci tools that I use. So right here we got the OTE. So I just, optimal trade entry measurement right there. In this case, I'm using it for projections. So from -1 right here, whatever, from the top of this ranges to the bottom of this ranges, this is the same thing from here to there is the same length as here from here. So we're looking for a measured move. So we're looking for it to project up here because this is the same length as from this high to this low. If we put this low right here, the high will land like right here. This is literally going to be that because this is the measurement tool of that. So then we pull this tool right here from the low to the high. Now if we pull right here, we get it lines up with this first fib. So that's 2 fibs that line up. So I'm going to go ahead and take my first profit at an institutional level, if so, that is close to it. So right here is the 200s. So this would be my first TP. But if we move this from here to here, if we're subjective about that for some reason, well, we are coming out of a 4-hour order block. We could aim for the top of the range anyways. But right here, if we do right here to here, then that means this fib lines up with here and here. So that means we could aim for right here. Both of those offer solid ratios. Now we could let it run even further than that, and there's probably some form of education or knowledge that I could probably use within, that I probably already know, that I could use for further fib, like from here to here, which I'm already doing. This range up into here, this is double the length, but this is the first TP, this is half the length. So that's expecting it to come from here up into here. Look what it's already doing. And then we could go ahead and say that this is going to be going to the 50 levels. It's about to smack the 50 levels as of right now, as we speak. Yeah. That lines up with the top of this range right here. This one lines up right here, and that fourth range right here. Super simple projection. Now we come into here, all this talk. And I honestly, I don't think I could do this move because I was fucked up, man. I'm not gonna lie, I woke up, I was just fucked up. At a level, so if we go for the first projection, which was going to be right here, now we could aim for the lines, we could aim in the middle of the sweet spots, we could aim for this one right here, or we could round it to the institutional level because that's what the algorithm, the intermediate price, the intermediate impending price algorithm is performing. It's going from institutional level to institutional levels. So from the hundreds to the 20s to the 50s to the 80s to the back to the hundreds. That's just because Wall Street they got one of these bad boys on their desk. Little things where you click in the numbers on the side. Yeah, and they just be like, you think they want to do like boom? No. They just want to punch the shit in. All right. Moral of the story. Alright, so we round to the hundreds. This is a solid ratio right here. So let's go ahead and do the math real quick. 2 contracts, you're good, man. Divided by, that's a 2.5 to 1. I mean, are you a greedy son bitch? Who fuck are you? It's 2.5 to 1 and it was delivered respectfully. Then we go to the next FIB projections. This would have been, you would have been sitting all day, you know what I'm saying? Probably would have been stretching, itching your balls. But let's say we would have took this there, my OBS is glitching now. So moral of the story is just pay attention, ES and Q. This is like the last week of this funded. So I was like, alright, I'm going to try to pass it. I'm going to switch to ES and NQ. Now I'm going to go into my next funded. At my full evolution, I'm going to just start ES and NQ. No gold at all. I don't give a fuck. There's going to be moves. They're going to happen. I'm going to just miss them. I'm going to just lock in on these ones right here. And I'm just going to be focused. ES and NQ. Like how everybody else is doing the shit. Like how you would probably do the shit. What took me is I didn't see the flow in ES and in Q. Like I could see it in gold, but I understood the order flow in gold, and then I just transcribed it back into a ES and in Q. Divided by 140. That's a 3.9 to 1. Like that's solid. And then let alone this motherfucker's about to smack the 50s right now. Once it smacks the 50s, I mean, shit. I wouldn't even hold it that long. Unless this was the top of the range, was the 50s, but it wasn't. 782, 50 plus 70 divided by 140. A 6 to 1 is looking like it's about to be smacked right now. Now I would just sit here and hang out with y'all like, yeah, let's wait for this 6 to 1 to get smacked because it lines up with all the projections. This there lines up with 2, I think, out of 3 projections. Yeah, it lines up with this one, the last of the Justin Whirlin, the JW. FIB, my Swift tool, and then my other Swift placement. It's about to hit these 50s. But yeah, I need to fully just come in on ES and NQ. I maybe will get a job. Maybe. Apparently I owe like some money and rent, but I don't give a fuck. I'm gonna make this shit work out. I'm thinking about getting the job only for the stress factor. That's the only reason I don't want the money. I don't give a fuck about any buying shit, going out, drinking, doing drugs. I just want the job just to relieve the stress part of my income. So that way I can just wake up and trade and look for good setups. Alright, well, it looks like 50s got smacked, like my projections would say, institutional level to institutional level. That's how that shit rocks and rolls. Alright, done. What did I actually do today? Because that's what I'm giving the recap on, but what I actually did today was, somehow I'm up $1.30. I don't know what I did. But, yeah, and